Part two, let's go.
My name's Brian Pilarski. I'm an insurance agent with Brown & Brown. We help businesses secure insurance and manage the programs and risk associated with that business. Ransomware has severely changed or greatly changed cyber insurance coverage. It has become the most significant and frequent event that businesses face today. The cyber insurance companies are suffering greatly because the amount of money that it costs to manage and respond to this event. It also, on the business side, the disruption that ransomware causes a business, whether they have insurance or not, is so significant that some are struggling to survive after a ransomware event. The most common misperception about cyber insurance is businesses think that they don't need it, that it doesn't pertain to them, that they won't be impacted or targeted by bad actors, criminals, or just overall kind of vandalism in electronic world sense. A typical cyber insurance policy covers two aspects for a business. One is the first party aspect of the insurance, which is the expenses to the business to respond to an event. The second aspect is the third party expenses and liabilities that may arise because of an event. And ransomware is typically part of every cyber insurance coverage, and it's on the first party side. So examples of first party insurance coverage would be business interruption because you have an attack. It could be the expenses to respond to the bad actor and extortion event. It could be the other different expenses needed to secure the environment and hire professionals to help them get back up and running. The third party expense examples would be the various privacy requirements for third parties that might be impacted by the event that businesses are required to comply with, such as credit monitoring, any possible fines and regulation issues that come up from various different government and state locales. In Europe, you have GDPR that has a variety of different compliance issues. California has the CCPA, and a variety of other states have their own version of privacy laws and requirements, possible fines and regulations. Crime insurance is actually a key component to couple with cyber insurance. In general, we look at the risk of cyber as two-pronged. You have the external events that could impact your business, but a majority of the ransomware and a variety of other scenarios of social engineering turn out to be a different way to purport crime on a business. And there are certain evolutions of this world we live in today where these bad actors are intercepting invoices and emails and posing to businesses' customers as that customer, so to speak, and tricking third parties into paying them instead of paying the customer. So what we found is the cyber insurance is really going to stick to the customer, the business, and their environment and what's happening to them. But these tricks to customers who pay the bad actors, that's really not a cyber insurance event anymore. It's now a crime event. So we use the analogy of a zipper. A cyber insurance policy needs to zipper together with a crime policy to give the best protection for a business, because it will cover some of these more elaborate ways that money is duped from others in a transaction online. Yes, cyber insurance companies now are looking at the security environment for all businesses that are looking at offering cyber insurance too. They are looking at the types of securities that are in place. Most often you have to have MFA or you're not eligible. As I mentioned before, now we're seeing EDR and MDR as a requirement to even be eligible for certain quotes and certain coverage limits within a cyber insurance policy. Companies often look at the price for cyber insurance. So you also have an adage of you get what you pay for. So I think companies need to pay attention particular to the deductibles or co-insurance or participation they may have with a cyber event, with the changes going on in the marketplace, what a business might have to pay with particularly a ransomware event. Watch out for deductibles or sublimits there. Also look out for a variety of other requirements that they may have that they don't know about. A good example would be a contract with their managed service provider. Sometimes we're seeing businesses being impacted by events that occur at their MSP. And when the business is going to their cyber insurance policy to seek coverage, without a contract with that MSP, we're seeing exclusions for that. So, like all things with insurance, the fine print matters. Look at deductibles for certain events and look at any other requirements that you as a business are required to have in place for the insurance to trigger.